Hello, and welcome to Losers Become Winners for August 28th. Alphas nudging XLV to 18%. Let's go look at that chart. There it is, 18% for XLV. And there's our warning track. It's a little bit of a doji with a little tail on the bottom, which is improvement. And there's some upward price action here in the lower indicators. All right. I need to also stop here and bring you to a point of change. In the marketing world, there's a thing called the Elvis Shift. And what the Elvis Shift means is that you start an advertising campaign and then you set markers for evaluation, 30 days, 60 days. And we are here at almost 60 days here on the challenge. And in that evaluation, you have to say what worked, what we're doing right, what we're doing wrong, and what we can do better. Well, what we've been doing wrong is we've been taking profits too soon, and the result has been we have not been making the big wins. And the case in point is right here. Here is my YouTube channel. And let's go to the top. And you can see the Jersey Girl. The Jersey Girl are all profit exits, but the Tigers holding at 5 points and the Alphas are at 8. Now we don't have, so exactly right. We don't have is this. We do not have 100 ROI exits. And the last one occurred on June 9th. And you can see the background. Every time that we have a loss leader who has recovered all of their losses, and whatever profits left over from those losses becomes a move to the winner circle. They come off my lost leaders list. And here we are with the red sweater guy. Well, take a note. We have not had a red sweater guy since June 9th. And the question is, what happened? Not the market. The trading happened. What happened was that here in June 9th, we had a shift going to the 30-day take profit at 30%. And both trading accounts, the Tigers and the Alphas. The problem with the taking profit at 30% is you don't get enough big wins to buffer against losses. That's what happens. Now, a case in point, let's go back to the proof. Red sweater guy was not just one, but look at this. We had 2, 3. There's 3. We had 3 in a row right there. We had 3 in a row right here. We had this one here. This happened on February 28th. Going further back. So you can see now my video started in September. The red sweater guy did not show up until November. We switched backgrounds. Back before then, we were using a football game background. But you can go back and research my older videos to see where those ROI 100s are at. And that's what it was. We were doing 100 ROI take profit, but not 30%. So the result was in the last 2 months of the 60 days of this campaign, the battling of the strategies right there, battling strategies, price channel versus 30-day moving average, we have not had our large ROIs. So the shift is, and let's go back now to our operation here. Our shift is we're going back to the 100% take profit rule. That's what the shift is. So we eliminated the Tigers. They eliminated also the price zone. There's no taking profits in price zone because the market gets a little jittery and we end up taking a small profit. And again, we miss out on the big moves. So starting this Monday, we are going to be looking at ROI 100. So here in the 30-day moving average, we'll get what our results. 18% is going 18%. It has to close in here for a stop, which is the initial rule for the 30-day moving average exit, or we wait for the 100% ROI. Now, but what happens between 0 and 100? Well, the 30-day moving average slowly creeps up on its own. If the stock is going up, as we saw with PGR, a good example. Let's go to PGR. PGR was our last exit with the 30-day moving average, and look what happened. We got out of this trade right here, take profit right there, and look what happened. It went up. PGR is going up, and I am not in the trade. Why? because I was taking profit at 30 ROI. And look, we made 17% profit. So the point comes down is we are here to make money. We're not here to prove that a certain rules or certain this or certain that is in the right. Nothing's in the right if it doesn't add money to your bank account. That's the bottom line. We're here to make money, and that money is either wealth, to grow capital, to have a chunk of money, or make a weekly or monthly income to sustain to sustain to add to your account. a little bit Get a little bit frustrated because I get in arguments with people about this. Okay, so that's what's happened. That's the Elvis shift for the battling charities. We're going to be going to the 100 ROI. So let's get back on track here. Now we'll go back and we'll go to Walgreen, which is our next position of interest for the alphas. And the alphas are here. And now another thing's happening here on auto zoom. We see this, and I have to do this. I have to zoom in. Well, this is another thing that's happened. I got a call from Thinkorswim, and they invited me to talk to them about how to make Thinkorswim a better platform. So I was quite jazzed by that invitation. Again, of course, I grabbed it. So here we are with waiting for this. It's this put. It's kind of flatlining. We'll see what happens there. And then coming over to CVS. And CVS right there and here. Now, the entry rules didn't change. Another thing too, the entry rules, we just changed the exit rules. So we're not going to get out of these trades sooner than before because we're going to wait for that 100 ROI. So there'll be some days when you're going to be just cruising along and there'll be no exits. But when those exits hits on those 100 ROIs, I have video proof. And you saw it here. There's video proof right there in my YouTube channel. You saw it. We have those 100 ROIs, and they pay spectacularly. These accounts were much higher than what they are today. Okay, clock is running, and let's go on now to CVX. And zooming in, and then, oh, perfect. This is the thing that I really want Toss to think about when you switch from chart to chart, that it stays nice and center and close where it can be seen to work. All right, XLE. XLE is our tug-a-war. It continues. That's right, ladies and gentlemen, the tug-a-war between the alphas and the tigers, the price channel and the 30-day moving average. Now, I have to zoom in and look here. This is the stop right there. There's your stop there for the PC for the tigers. And here is where, look, price came down and came up. And this is good for the tigers because it is the call. It's a call. Not good for the alphas. They have a put. So if it comes up and crosses into that, they'll be taken out of this trade, and the tigers will continue moving and marching into their direction. That does take over to the tigers. In conclusion, and here are the tigers, and the tigers are there. A UAA is the only other position for the tigers, and there it is for the tigers, and their stop is down here, and price is moving. It's starting to move up a little bit, and it's a call. So with that said, we are going to conclude today's report of losers become winners with XLV at 18% for the alphas. And I thank you very much, and we'll see what happens in the next few days, weeks, and months till December. Take care. Bye-bye. Thank you.